Hello and welcome to our midweek forecasts interview. Today's focus is on the Japanese yen, and after seeing the currency weakening against the dollar recently, it's time to find out what the financial professionals think of price movement in the short, mid and long term. Well, joining me on the line is Managing Director of FX Strategy at BK Asset Management in New York, Kathy Lean. Kathy, you're projecting a 101 level in a month's time. What's your reasoning behind this?
I think over the next month, you're not going to see much in the way of changes in the dynamics that have been driving the flows in dollar-yen over the past couple of months, which is that U.S. yields will remain stuck at relatively low levels, and the Bank of Japan will remain comfortable with their current level of monetary policy. This is different from where I think these dynamics are moving going forward, but at least on a one-month perspective, there's no real reason for either one of these dynamics to change. And therefore, I expect dollar-yen to remain under pressure and level out at around 101.
Moving on to your 3 and 12-month projections, only 3 digits separate them, with 103 being your 3-month and 106 being your 12. What are you expecting of the yen as we approach the 3-month mark?
I do expect dollar-yen to strengthen over a 3-month period gradually, because the dynamics will start to change in that you're going to see more and more evidence, at least from the Japanese perspective, of the sales tax increase basically having a more significant drag on consumer spending. The Bank of Japan has made it clear that they're mostly in reactionary mode, which means that they're not going to ease monetary policy until the data indicates that they need to. And in the month of May, we've mostly seen just the beginning of April data, and I think by 3 months forward, we'll get a much greater clarity on how much damage the sales tax has had in the economy. I do think the BOJ is poised to ease this year. It may not happen in the next 3 months, but we could see expectations build for BOJ easing. At the same time, we're going to get closer to the end of quantitative easing in the U.S., and that's when traders will start to think about when the Federal Reserve could set its first rate hike.
Has the April 1st sales tax hike in Japan been priced in with respect to trades in the currency market, do you think?
It hasn't been priced in at all, because if you take a look at positioning, you do see traders long dollar-yen in anticipation of negative impact from the sales tax. But we've only seen dollar-yen decline, and so as a result of that, many of those traders have unwound their trades. And so I think that while fundamentally many people believe that the BOJ will need to ease, we haven't seen that in the price action, which still creates an opportunity.
Okay, Kathy, thank you for that analysis on the dollar-yen. Forecasts will return again on Friday, but that's it for now. Bye-bye.